Hey, what's going on, guys? This is Daniel Kwak. Welcome back to the Raising Capital Mastery podcast. Today, I have a very special guest. He's 10x more special than a lot of the other guests I've had, and it's none other than Uncle G, Mr. Grant Cardone. How are you doing, sir?
Thank you so much for having me, man. I'm doing great. And I love the name of your podcast that you guys are, teaching people how to raise money because including myself, I probably don't talk about how to do that enough.
Yeah. Well, I want to get started because, when your assistant, your team reached out to us about being on this podcast, I was super intrigued because I heard that you were pushing a fund for non-accredited investors. And, I think for one, that's amazing. It's a great opportunity for the little guy to get involved with, large scale real estate, which is where a lot of the cash flow really is. But for you, besides that, what are the reasons as to why you wanted to put this thing together?
So, number one is I can't, I'm a little guy. I know you told me your story about your parents coming here. My grandparents were immigrants to America. The American dream was very limited and in their thinking about it was limited, right? So once they got to a house, they kind of like thought they had achieved it. And I don't think I think they gave they got satisfied, right? So I see a lot of people in America, particularly the middle class, that, they end up with one house, maybe a small business, and their kids, their debts are paid for. They end up with a little mutual fund or something in a retirement account, but they never really tap into the possibility of this great country. And for me, that's real assets that produce income that allow me to live the life I want, go where I want, do what I want, different than a business. I'm an owner or founder or partner in 11 businesses. Those businesses require a lot of work, a lot of stress, a lot of headaches, customers, just everything, bro. Like I'm always having a push on them. This real estate that I buy back here provides me with passive income, leverage, the benefits of inflation. And so I see so many people never being able to take advantage of that. I started with one house, did a second house, then I had a couple small complexes. Most people never get past the first house. So I open this up to the everyday person so that a guy can literally go from learning to being an investor in 5 seconds. So 95% of people that educate themselves on real estate never even buy one piece of real estate.
Yeah.
And so literally I'm able to stop that by saying, hey, the system is rigged. It's rigged against the little guy. The whole deck is set up for the big guy. I'm not talking about me. I'm talking about Goldman, JP, Blackstone. I'm talking about these freaking whales. And I'm buying assets that they would typically get, but I'm buying them, I'm getting control of them, and then I'm letting the everyday family invest alongside me rather than making them my partner.
Yeah. Well, I think it's a great move too, because if you think about the way a person is educated nowadays in the United States, we only care and want to learn about things that we have our money invested in. There's a great teacher by the name of Jesus who said, where your treasure is, there your heart is also.
Yes.
So it seems like that's kind of what you're doing with this non-accredited fund.
Yeah, we're rather than I've made it so my courses are more money than the investment. The average tenant in this building behind me, this is the building we have open right now, pays almost $3,000 a month. An investor can invest in that building for $1,000 a month. So we're literally making it where our tenants can invest with us, which is another goal of mine, is to turn our tenant base. We have 12,000 units now, 12,400 units. And the goal is to make our residents, also investors in our properties, to make literally institutional quality assets available to the everyday investor. An 18-year-old kid with $1,000 can do this rather than dropping it off at a strip joint and losing the money. Or I was in a casino. I was in Vegas last week at the Mirage, and I watched a guy bet $1,000 on a hand. I'm like, he could put that money in this deal. You're never going to lose it. Next time you see it's going to be worth 3 times what it is today. And you get paid while you wait for the investment to go up.
Yeah. Yeah, Grant, I want to touch on something you said earlier. And I think you and I are cut from the same cloth when I say this, is that, when you think about the 1%, you think about the self-made millionaire guys, a lot of them own real estate. I remember reading an article when I was 17 years old, changed my life, saying that out of the top 1%, 76% of those people made their money by investing in real estate. And you're offering that to the individuals out there, that the everyday guy. But I could make an argument that's why cryptocurrency has gained so much traction, because the door for everybody to come in was so big. So do you believe, Grant, that is the thing that could really help elevate middle-class America and expand it by giving people the opportunity to invest in something like real estate that typically only the top 1% of people can invest in?
Well, if you look at, and I agree with what you're saying, if you look at the middle class America talks about the equity in their home being so valuable, right? Like, had they not had that, they would not have $300,000 or $400,000 worth of net worth. Well, this asset class is a single family home on steroids. It is so much better than a home. A home does not provide you with passive income. It does not provide you with unlimited tax benefits. It does not provide you with unlimited amounts of interest deductions, maintenance deductions, and it doesn't provide you with cash flow. So, or the leverage. You cannot get the leverage in a single family home that you can get out of one of these properties. And it doesn't get you the true wealth building platform that these big buildings do, which is every 7 to 10 years, I can refinance this property, pull all my dough out, and still own this asset. And unlike other businesses, this kind of real estate is like literally like, it's like picking up a Gatorade and drinking it because it comes with income, it comes with customers, it comes with employees. That property has 16 employees on it. When we buy it and take it over, I basically adopt the 16 employees, the leasing agents, the maintenance, the management, and all the cash flow of the building. So it's a set up, built-in business. It's like a franchise without a franchise.
Gotcha. No, that's so powerful. I think that's fantastic. And, I think our message is very much the same, which, hey, I think real estate should be at the top of the list in terms of what people invest in when they're thinking about their long-term growth, their long-term income, as opposed to something like a cryptocurrency where, man, we don't know what the price is going to be tomorrow. We don't know what it's going to be a week from now.
Dude, if you bought Bitcoins 5 days ago, you lost 7,000 points in the last 5 days. I don't know how you guys feel about that. I know you crypto bugs. You can't say anything negative about this thing. You guys are, you talk about religious fanatics. Talk to anybody about crypto. It's going to the moon. It's going to the sky. Dogecoin, Petcoin. Like I'm like, okay, cool, man. I don't have a problem with it. I have some Bitcoin. But I cannot study every Bitcoin, every Ethereum, or every crypto, Bitcoin, Ethereum. I don't know what the next thing's going to be. The Doges, all the coins that are out there, the alternative coins. I don't know if they're good or they're bad. I know this: 2,000 years from now, that building will still be there. Literally 2,000 years from now. The Vatican has been around for 700-800 years. The Catholic Church is the 9th or 10th largest property owner in the world. And there's a reason why. This is not a new thing. This property thing is not a new thing. Does the US dollar go away? The US dollar is a new thing. It will probably fail in our lifetime. It's garbage. Without a doubt, everybody, the cryptos agree it's garbage. Real estate people agree it's garbage. So all I'm doing is converting garbage, pieces of paper, which is really digits already. This is already a digital currency. So you crypto guys, this $20 bill is, I don't really get much of this paper anymore. Unless you're at a 7-Eleven or a strip joint, you don't see a lot of 20s anymore. This typically gets converted to digits now at Wells Fargo. The fact that you're converting it to a code, super cool. I'm with you. But what I want to do is upgrade it from a code to that.
Yeah.
I can't sleep under a BTC. I cannot sleep. I need a place to sleep. Cryptocurrency will not change the fact that I got to have a place to sleep. I got guys that are trading their Bitcoin for pieces of this building. So, but I got a lot of guys that are like, I'm never trading my Bitcoin, which is a bit of a problem, right? Because I never want to get rid of it. This building, I never want to get rid of it.
Yeah.
Okay. But what I do want to do, the advantages, and there's probably space for both of them. I'm trying to make a big play here. Like I got $4 billion worth of this stuff. So I'm very committed. This for me is not a gamble. I don't look at whether it went up or down. That building's $230 million. I put $70 million down, 70 million of my own money. I financed the other 160. I can't do that on Bitcoin. I can't go make a $250 million worth of Bitcoin with a $70 million check. Can't do it. If I want to buy $230 million worth of Bitcoin, I need $230 million.
Yeah.
And I don't know how many people are willing to make that bet, but I'm not.
Right.
I could buy that building and you could take it down 10 times if you want. It could be a $23 million building that took $6 million. But the leverage that I get from that building is phenomenal. Number two, I get passive income. I literally get paid to wait for inflation because if inflation hits Bitcoin, if it continues to crush the US dollar, the cryptos will benefit. Okay. As they do, anything more real than a crypto will also benefit. Housing, farmland, property like this, all those things, as you know, go up in value as well.
Yeah. And you know, what I love about it too, is that, you know, I can't control the price of Bitcoin. You know, there's nothing I can do. However, what I can do is find, you know, a distressed asset that has below market rent. I can increase the rent and increase the value and create a win-win for me and my investors. You know, I love that. I want to switch gears. Oh, go ahead, Grant. Yeah.
No, and I think everybody knows that rents are going up.
Yeah.
I mean, they've been going up since 1945. Like there's not one 10-year period between in the last 70 years. See, I'm not a trend guy though, right? Like I'm going to wear my brand. I'm not going to wear the hot brand. And I don't lose money. Like I just refuse to lose money. I busted my ass for money. I do not have space in my emotional makeup to lose money. I don't like it. I don't gamble in Vegas. I bet $25 because I'm with a buddy and we're having a drink and a smoke or something. But he could play. He might be playing $2,000. I'm richer than he is, and I'm paying $25. And I just can't. I just hate losing, dude. So when I put money in this thing, I'm like, there's no way I lose money in that. Like, there's no scenario where you can tell me I lose because I'm just going to wait out the cycle. And the rents are going to go up. And as the rents go up, the value of that property goes up. So like, I'm so committed to this. I rent where I own. I literally sold a house in LA, took the equity out of the house and went and bought apartments with it and rented a place to live in. I'm not the only guy that believes in that, by the way. Okay. Elon Musk doesn't own a home.
Yeah. I don't either. My wife and we also rent, and, you know, I own apartments, you know, so to your point, you know, I agree. So I want to switch gears with you here for a second, Grant. So, you know, I was thinking this morning, some questions I want to ask you, and I'd love to hear your take on this. So where we are in the United States with economically speaking, right? I mean, we've got high inflation, right? I mean, June, July, we were talking 5.4%. Now it's nearing 7%. We have the Fed balance sheet at over $8 trillion. That's never happened before. You know, we have interest rates at 0%. All the while, we have everything else that's going on with the pandemic and everything else going on economically. Our president just signed a $1 trillion infrastructure bill. I mean, we have all sorts of these things that are happening. So we are in many ways in uncharted territory. So for a guy like you who owns billions of dollars in real estate, and you are the fiduciary for many, many investors, thousands, and you have a big name, what are your plans? What do you think people should be doing to navigate these waters?
Yeah, you should buy more real estate. You know, this is the asset class, this kind of real estate. So what happens in inflation, right? Inflation, obviously, this dollar, this is not a new thing. You know, I don't know why all of a sudden everybody's talking about inflation. The first inflation that happened in this country was not the increase of prices. It was the decrease of interest rates on checkings and savings accounts. So when your parents came to this country, they were earning 6 to 8% at a checking account in a money market. Today, you're earning 0.012%. I need 8 years to earn 1%. Okay, $10,000 will be worth $10,100 in 8 years. And I think a lot of people don't know that. Very educated people do not understand how little money they're earning at the bank.
Yeah.
So the second thing is most people they don't understand. If you have a checking, a savings account, a money market, you've been funding my real estate deals for the last 20 years. And the viewer right now is like, what do you mean? You've been funding my real estate deals. When you take and you drop off $40,000 at Wells Fargo and leave it at Bank of America, Citibank, or Wells calls me up. Can we lend you this money? That money does not stay in your account. Okay. That money gets lent out, and they like to lend it on these projects. And so they won't lend it to you for your business, but they'll lend it to me for that business because they trust that business so much. And even during COVID, we bought $1 billion worth of real estate during COVID, with all the headlines saying the freaking world's coming to an end. Nobody's going to pay rent. There was eviction moratoriums, and we borrowed $700 million during COVID. Banks were like, yeah, we'll do it. Yeah, we'll do it, because they saw the collections of the properties. So, look, inflation, I think it's temporary. I do not think this is a permanent thing. I kind of wish it was, because it bangs rents, right?
Yeah.
But I don't think, for real inflation to take place, you have to have a velocity of money exchanging, and we don't have money. The money velocity is the lowest in the history of the United States of America, meaning nobody's really trading money. They're not actually, like the money velocity indicator. It says I got $40, and how fast that single $40 moves. It actually is not moving very much, probably because of the creation of all this money that you spoke about. But to get true inflation, long-term real inflation to stick, you have to have a lot of money velocity. People are trying to get rid of their cash.
Yeah.
And right now, what's happening, on the other hand, is people are actually accumulating debt. Not the little guy. Like it used to be the little guy that was borrowing money. Now it's the freaking giants. Apple Computers got $90 billion in cash, and they went and borrowed $90 billion. Like, well, how does that make any sense? Because they would rather keep the cash on their books, go borrow money for nothing, because they can write that money off. You can't write off your savings, and you can deduct debt. So they'd rather just keep their cash on their account, even though it's useless. Maybe they'll convert some of it to crypto.
Yeah, maybe. And I have a very smart friend, an economist. He was actually been in our channel before by a guy by the name of Peter Schiff, who says, hey, during a time of high inflation, the rich are the ones that borrow money, because they know that the inflation tends to offset the cost of that borrowing the money. Yeah. So I love that you brought up that point. Now, you mentioned that inflation is temporary for you, right? And that's kind of what you're saying. In your opinion, what is going to happen to the housing market? I'm talking about the average American family that owns a house. What is going to happen to the housing market when inflation, that temporary season, is over? What are your thoughts?
This is a great question, and one that a lot of people are not asking. I think long-term single family homes in a decade will start to depress. So I don't see a market for the single family home.
Really?
Millennials don't want them. They don't want the responsibility. They don't want the maintenance. They don't want the aging. They don't want the loss of mobility. And baby boomers, like, they're like, I'm done with houses, bruh. Like, that ain't a dream. That's a nightmare. I don't want one. I don't need one. I want to travel the world. I want to go on cruises. I want to go see the world. I don't want to live in Chicago during the winter, and look at my neighbor. Now, some people think that's really cool because you hadn't done it yet. But once you do it, you're like, okay, I got it. And some people, when they're starting a family, they're like, oh, I got to have the place. Okay, well, you can have these apartments that are being built today are so unbelievable. The swimming pool, the security, the social network, the gym in it, the technology built into these apartments. When I was growing up, if you rented, you were poor. Today, you got rich people saying, this is the way I want to live my life. So I think that there's a big switch going on, that you got 80 million baby boomers, your parents, my age, older than me, that are moving into the golden age, the other side. And they're like, when they die, all the kids are selling their homes. You're not keeping your parents' home. You and your brothers are going to split it up. You're going to sell it as fast as you can. And just imagine if all that activity happens within 12 or 13 years and you got 80 million homes on the market all at the same time that nobody gives a shit about. And they're like, sell it. I don't care what you get. I just want my money. I want my equity. I think there's $12 trillion sitting in equity in homes today that is dead money. So that starts to offset some of this debt that you talked about, right? If people, the government's taking on more debt and the people are taking on less. I would be upping my debt right now. Again, what you referenced, I would grab all the equity out. I'd probably sell a single family and get rid of it. I'd convert the $400,000 in equity into something that could actually be leveraged into a couple $1 million. So I wouldn't have the equity in a home. I would rent where I live and I would own what I could rent to other people. And I would use the rental income from my investments to offset what it cost me to live. And so long term, I think actually we're in a deflationary decade, not an inflationary, because the cost of music is zero. The cost of entertainment is almost zero. One day you're going to go to a baseball game and a football game. You're going to put a headset on. You're not going to travel. There's not going to be any travel, dude. You're going to hit your little headset. You're going to go into a metaverse and you're not going to be in the stadium. You're going to be second base. And it's going to be so cost efficient. It's going to cost you like $20 to be in the game. And you can play the game anytime you want. Yeah. So you can, rather than paying, I paid $113,000 for 2 tickets at the World Series. Those tickets, everybody will be able to have my ticket. You'll be right behind the umpire, and it might cost you $50. So that actually operates as deflation. You're going to have people that never buy a car again. They're going to be like, come pick me up, bring me over there. I'm never going to own a car. I won't have insurance. I will not need a garage. And so I think that we could be moving into spaces where things cost almost nothing. Gasoline, fuel prices probably will go down in the future because we're going to consume less. And I know some of this is contrary thinking, but by the way, I still need a place to put my headset on.
Yeah. Yeah, well, you might not be too far off considering that, for the month of September, the year-over-year numbers, 42.2% increase in the cost of a used car. So you might not be far off there, Grant. I mean, I don't know how many people are going to continue to pay these high prices for vehicles. By the way,
that's some of this is because of these supply problems. Container prices are going up. This is that whole supply problem caused by COVID and China and everything that's going on there. And you got labor, you got unions that are like, I'm not taking the shot. You got truck drivers saying, hey, you ain't putting it in me. And you got policemen saying, I'm not doing it. And you got firemen standing up. You got nurses saying, I'm not doing it. So you got this whole big disruption, right? And once the supply chain, once that resolves itself and things start moving again, container prices go back to $3,000 a container rather than $25,000 a container. Cost of goods come down. Supplies are going to open up again. Normal marketing will take place. And we won't have this insanity that's going on.
Yeah. Well, so Grant, I want to give you a little bit of a pushback. So you said that you believe that homes are going to be, deflationary. They're going to be depressed. What would you say to the individual, which, by the way, for me, I wouldn't say I'm either or. I'm just looking to learn here because, I'm 27. I haven't really been part of a market cycle quite yet. But what would you say to the individual that says, Grant, the future is in home offices. Everybody's going to work from home. Therefore, people are going to want a bigger home. And, the prices of the single family house in the housing market is going to continue to increase over the next 10, 15 years. So for you, what would you say to an individual who makes that comment to Grant Cardone?
They could be right. I'm not, I'm not interested in being right here. Let's say my sister's 75 years old. She's got a house that's worth $200,000 in Lake Charles, just one person. And she dies next week. Let's say she dies next week and she puts me in charge of selling the house. I don't want the house. So then I'm going to sell the house, dude. Like I have no emotional connection to this house. I don't care about this house. I don't want to do anything with this house. I don't need to get the top dollar for the house. I don't give a shit. Like I don't care. And I'm like, sell that house. Don't call me about it. I want nothing to do with it. Okay. So if you don't have somebody emotionally connected to the home, now the reason we have this big spike in housing prices right now is because of COVID. And what happened after COVID is exactly what happened after 9/11. When people get emotional and they get terrified about the quality and the future of their life, they buy shit. And the first thing they go by is what is to them their safety. I'm going to buy a house. This happened right after 9/11, man. Housing in America went nuts. It wasn't because the interest rates went down. It went because people were scared of terrorism. And they're like, if we're going to die, I want to die at my house. And this happened after COVID. Okay. Oh my God. But the difference this time is the people that are buying homes today are buying a second and third home. This is the wealthy people buying homes, and they're investors buying homes. The end user is actually not getting a house today. Those homes are being converted to rental properties. So my sister, however, is still stuck with her little place. She's not going to sell it because she cannot imagine renting. She's stuck in a very bad place in her life where she's like, I got this equity. I'm going to keep the house. I'm not going to take on debt. She's going to die and now sell. Okay. Well, if she's in a good market, cool. But where's the money go? The money's going to go to whoever she left it to. Nobody really cares about it. If it's a bad market, where does the money go? Nobody cares. So the house is going to get foreclosed. Nobody's going to give us, you're going to come buy it. You're going to come steal the house for $120. You're going to rent it to somebody for $1,000 a month, and you're going to own that house forever as an investor. And so what just happened was you had a suck out of the original use of a home was for a family. And that's what happened in the 50s. That's how this country was built, by the way. It was built on the back of housing and manufacturing. Manufacturing's gone in the country. Housing goes, you got a problem.
I see. So you're saying that more so the future of single family housing is more so going to be in rentals owned by institutions. Is that your way of saying that Cardone Capital is going to get into single family rentals in the future?
No, probably not, because if I could buy 300 at a time, I would.
Yeah.
I can just tell you this building that we're buying right now, we're 99% occupied. The person that lives in that building, their average income is $390,000 a year. These are not broke people.
Yeah.
Now, let me just say this about the housing thing as well. Okay. There's going to be the average home in this market's $4 million within a mile of this property. 4 million. Okay. Not everybody can buy that house. They're on the water. These homes are on the water. Those houses are going to be desirable as long as they don't go underwater. There's going to be parts of the country that die off. Okay. Some of these cold states that you're in, there's going to be parts of that in the suburbs that probably start to die off because jobs aren't there. The old manufacturing rust belts, they will die. Not all real estate is created equal. And so you can see people migrating from blue states right now, moving to places that are warm, tax friendly, business friendly, COVID friendly, where government maybe doesn't take such a big stance. Whether that lasts or not, I don't know. But I know that we have more migration from the state of California into the state of Florida today than ever in the history of the state of Florida. And some people might not think that's a big deal. That means somebody sold their home in LA and moved all the way to Miami. And that's a completely different lifestyle. They left 70%, 70 degree weather to 95 degree weather, from almost no humidity to a lot of humidity, in order to have a different lifestyle. And that's happening from New York, New Jersey, Illinois, your great state. And they're doing that to Texas. They're doing it to Nashville. They're doing it to the Carolinas. They're doing it to the entire belt. Georgia's on fire because of it.
Yeah. Yeah.
And it doesn't mean that I'm right, by the way. I'm willing to be wrong.
Sure. But by the way, I agree with you. I think the future of the single family home is actually more so in depression than it is in appreciation, for a different reason. I think if you look at what's happening with the reverse repo market and the statutory liquidity ratio and the banking system, because of COVID, that's allowed a lot of liquidity and it's made money a lot cheaper. And because of it, it's elevated the price of the single family home, in my opinion, temporarily. Yeah. So with that said, Grant, what are some things that you want people to know about? What do you got working on? What would you like to tell our viewers?
Well, the one thing that I'm trying to do, because I think that an individual buying a single family home and making a bet on one house, when you do a mortgage for 200 grand and then you got to get 3,000 for that one house, everything's fine. That's how I got started. You got a $2,000 payment and you're getting $3,000 in rent and it looks like you're making $1,000 and everything's cool as long as you got a renter. The moment they pull out, you got a problem. Now you're on the hook for $2,000 and you don't have a renter. Now you got to pay attention to get a renter, replace the renter. Maybe you can do some Airbnb, but you're dependent upon one door. And no business that depends on one source of income is a good business. So I would tell people, if you're going to play the real estate game, the more doors, the better. The better the location, the better. The more jobs around there, the better. And all those things mean you're going to pay up to get that piece of real estate. The price I pay for real estate is like the fourth or fifth thing that I look at. Definitely not the first thing. And I think most people look at the price they pay before they look at the deal they get. So I've learned after, I don't know how many deals I've done now. We got $4 billion on the books. So I've probably done 45, maybe 50 deals in my career. It's not a lot of deals for $4 billion. I've never missed. We're very, very disciplined how we buy stuff. And now what I want to do is I want to help the everyday investor. I literally want to break the stranglehold that institutions, Blackstone, Goldman Sachs, JP Morgan, these big institutions, these are $1 trillion institutions. They got a lock on real estate. And I want to, like that deal, I'll just explain this deal to you. The equity on this deal could have come from one group in New York. Already had the debt. This group would have been like, we'll give you a check for the deal and keep you on as a partner. And I'm like, I don't want to do that. They're like, where are you going to get your money from? I'm going to get it from my friends on Instagram and Facebook. They're like, what are you talking about? It's called crowdfunding. They're like, there's no way, man. There's no way. Nobody gets their money from their everyday guy. I am. And so that $70 million I need to purchase that deal will come from my friends, $1,000 at a time, $2,000, $3,000, $5,000, $10,000. And we're going to buy trophy properties. I'm going to do this. That deal's $230 million. I'm going to do this 25 more times. And I'm going to build a massive fund that will become a bank. And it'll be a bank for the everyday people.
Very nice.
And then I'm going to go sell it to the same group that wanted to give me the money for this.
I love it, man. I love it. So obviously a lot of people know where to find you. You've got millions of followers on Instagram. You've got the largest business conference in the world, but specifically to your real estate projects, right? Let's say somebody is listening to this and they go, hey, I'm 19 years old. I want to learn more about real estate. I want to put $1,000 with Grant Cardone. Where specifically do they go for them to do that?
Go to cardonecapital.com. And read the PPM. It's a memorandum that explains the investment. When you give the $1,000, your money's gone. It's illiquid. It's not. You can't call me up and say, hey, I need my money back. The money's invested in the property. 100% of the $1,000 goes to the property. There's no broker, no middleman. And then you got to just wait for me to call you up and say, hey, bro, here's your money back.
Anything else you want to say to our audience before you dip, Uncle G?
Look, when the world falls, and it will, the stock market will fall, folks, and it's going to be brutal. Anybody doesn't think that's going to be brutal? There's a lot of money sitting around right now. That's floating everything up. So when this thing falls, and I'm not being Mr. Doomsday guy. I was with Kiyosaki on a call yesterday, and I'm like, he's like, man, you're so positive. I'm like, you're so negative. I said, bro, I brought $4 billion worth of real estate while you were talking doomsday. You're talking gold and silver and like the world's coming to an end. I bought $4 billion worth of shit while you were talking shit about it. And he's like, this is my show. And he literally pulled the plug on the show. He got so upset. Wow. I'm like, dude, why are you getting so upset? I thought you wanted to educate people. Education comes in the form of being open to new information.
Yeah.
And the truth is, Robert, you've been wrong. For 10 years, you've been wrong, saying the world was come to an end. It hadn't come to an end, and gold and silver has not been the place to be.
Yeah.
Because what are you going to do with it?
Well, thank you for spending so much time with us. Appreciate you, man, for all the books you wrote. I mean, changed my life, changed my brother's life. Hope we can cross paths more in the future.
Appreciate you, brother.
Yes, sir.
I'll see you in December, man. Come see us.
All right, man.
Okay.